Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So today is going to be one of the more important videos that I've probably ever put on the YouTube channel, and that's going to be sort of taking a step back from the short-term, day-to-day kind of news and fluctuations in the stock market that everyone sort of tends to focus on, and looking at the long-term view of what the stock market has done performance-wise over the last 50 or 100 years, looking forward at what it is likely to do in the future, and hopefully sort of refreshing your mind and getting you back into that long-term mindset for investing. I think with younger generations, myself included, I'm sort of in my mid-20s at the moment, I think it's easy to get caught up in a lot of kind of short-termism and short-term mindsets. We're used to getting information, having it at our fingertips and getting it, straight away every single day, financial news included. And that's something that really wasn't present 50 or 100 years ago. So I think that pushes a lot of people into being short-term focused and focusing on day-to-day or month-to-month and year-to-year performance a lot more than they probably should. So I'm going to dive into some data around what the long-term performance has been, what we can potentially expect in the future, and like I say, hopefully that refreshes our minds and has us ready to go as we move into 2020 and into another year. So hope you enjoyed the video. Let's get into it. So I'm going to put up a screenshot here of a chart of the Dow Jones Industrial Average, one of the major indices over in the States, from the early 1940s. And the reason I've chosen this particular point in time is because this is the period of time where Warren Buffett, greatest investor of all time, this is the period where he bought his first stock. So Warren Buffett was born in 1930. When he was 11 years old, he bought his first stock, so that would have landed him in 1941. And you'll see from this chart that the Dow Jones Industrial Average was floating in and around 120. And if we compare that to the chart of today, so I'll put up today's Dow Jones Industrial Average, we're sitting about 25,500. And that's a massive difference. So the Dow Jones back in 1940 was not at 1,000 or 12,000 or anything like that. It was 120. These days we have, close to 1,000-point fluctuations on some of the more major days, which is more than 10 times the overall value of the stock market back in the 40s. So very small valuation when you look at it today, and it shows that the stock market is a long-term compounder. If I put up another screenshot here of the stock market from 1900 till just a few years ago, you'll see that it looks like basically a flat line for like the first 50 or so years. And even during that time, there was massive fluctuations. Like we had, I believe it was an 80 or 90% drop in the stock market in 1929 during the Great Depression. And you can barely even see that on the chart because that fluctuation was so tiny relative to where the Dow Jones is at today. So that, I hope, puts things into perspective. If we take that data and then we extrapolate it forward and look at some projections moving forward, if the Dow Jones only does 5% a year on average for the next 40 years, so I'm currently 25, so in 40 years I'll be at the magical age of 65, which is the current retirement age here in New Zealand. When I get to 65, if the stock market compounds at 5% per year, just 5% per year, we're going to have the Dow Jones at 200,000. Compare that to 25,500 today, or 120 when Warren Buffett first started investing. We're going to be going from 120 to, 200,000 over a couple of lifetimes, which is pretty unbelievable. And it just shows the real power of compounding. A question I occasionally get is, how does the stock market compound? And to pull back and look at it simply, the stock market is something that allows investors to buy assets that expose you to the growth and sort of human potential. So over time, humans become more and more productive. We get all these great new technologies that we create. And when I say we, I really don't include myself. There's a small percentage of people coming up with all these incredible innovations, but eventually they filter down to people like me and you. Even 20 years ago, it would have been probably tricky for me to do something like I'm doing now, talking to a camera and uploading it to the internet. We would have been getting close, but it would have been a much tougher job than it is now. So, humans become more productive over time. Part of that is we have companies make profits, and they obviously distribute some of that to shareholders through dividends and so on. But most companies are retaining some of those earnings, retaining some of those profits, and they put those profits into things like research and development and creating these new technologies to build the company on and on in the future. And as those companies get bigger, they have more profits to put into research and development, grow the business even more, and it becomes this snowball effect that grows over time. So it's a magical thing. That is sort of the numbers in terms of where we might be looking at 40 years out into the future. If we put that into dollar terms, I think it's also a really powerful tool for people like myself and people early in their investing sort of lifetimes to really realize how much a dollar is truly worth to them today if they put that dollar to work. So if we put a dollar to work today in the stock market and we compound it at that 5% per year like I just mentioned, then we are going to end up with $1 invested today being worth about $7 in the future. And that's nice. A 7x on your money is always great. We've obviously had 40 years for that to happen, so it's not a spectacular return or anything like that. But we have gone from 1 to 7. The great thing with the stock market is if we have our initial dollars go from 1 to 7 through this capital appreciation of the Dow at 5% a year, that's actually not the only thing we get. So the other thing that we get is if I look at the current dividend yield of the S&P 500, it's currently a fraction below 2%. It's fluctuated in and around that for a little while now. If we take that 2% dividend and we actually reinvest that, so that's a very common approach, especially if you're taking more of an index fund type approach, something like a New Zealand Top 50 fund or a Vanguard S&P 500 fund. You can take that dividend that you get paid every single year, reinvest it into the stock market to buy more shares in that index fund, and essentially you've shifted your gain from 5% plus some spending money on the side, you can go on a trip or buy some coffee or whatever, to now having a 7% return, and something that, again, if you're reinvesting these dividends, will grow at 7%. So if I put up a screenshot here, suddenly instead of going from $1 to $7 with our 5% return, we've gone from $1 to almost $15 with a 7% return. And if we push this up again to look at, something that's been more of a return historically is actually a little bit better than 7%. If we push that up to 9%, we're getting to the point where a dollar saved today is worth nearly $30 to your future self. So the numbers get quite large. And if you put that into a practical perspective, if you're saving $10,000 a year at the moment, that could be worth as much as $300,000 to you in the future. So that's really my message to you today, is to focus on the long term, realize that money you save today is worth much more to your future self if you can put it to work at a reasonable rate. We're going to have fluctuations in the stock market. We're going to have pullbacks. We're going to have bull markets. We're going to have recessions. Going back into last century, we had world wars and all these different things, Great Depressions and so on. And we still came out the other side okay. Over time, we're going to stumble, but if you stick with things for the long term and can put money away consistently into these types of vehicles, you're going to do very well. You're going to set yourself up for your future, and the future you is going to thank your past self a very large amount. So that's my message today. If you have got any tips on staying long-term focused, definitely drop them down in the comments below. This video is probably going to be coming out right around Christmas time, possibly slightly after. So if it is just after and you do celebrate Christmas, I hope you had a great Christmas and have a great new year if that hasn't happened already as well. I'm not exactly sure when this video is coming out, but have a great holiday season if you do celebrate that. Have a great, safe, relaxing time of the year. I hope you've all feel like you definitely deserve it going into 2020 and you're ready to go for another year. So all the best for that, but that is all from today's video. If you did like it, please hit like, really helps out the channel. Hit subscribe so you can see future videos. You can watch some old videos over there if you want to as well. But that's all from me today, and I'll see you in the next one. Cheers.